Vast Resources is an AIM-listed mining company with interests in Romania, Tajikistan and Zimbabwe. Well, this week's shareholder update relates to the Takob Mine processing facility in Tajikistan. I'm delighted to be joined by the Chief Executive, Andrew Prelea. So, Andrew, the market tends to forget that the business has several interests. Now, the company has an interest in a joint venture company that's associated with the Takob Mine, and we've learned that the first shipment of lead and zinc concentrate is being loaded, ready for delivery to your offtaker, Trafigura. Right,
Correct.
It's a milestone. Congratulations.
Thank you very much.
How tough was it to complete all the logistics for shipments?
Well, considering Tajikistan is a landlocked country, and if you consider its neighbours being Afghanistan, Uzbekistan, Kyrgyzstan, Kazakhstan, and Pakistan, and China, one would think that concentrates going into China would be easy. But of course, there's no rail network into China, so you actually have to export it up into Uzbekistan, across into Kazakhstan, and from Kazakhstan into China, because China's a big country and the smelters are not on the Tajik border. So getting all the approvals and the export licenses, it's time consuming. There are absolutely archaic laws still in Tajikistan. You have to remember that it's not only a former CIS country, but during the Russian rule, a lot of information transfer didn't take place. And just to put things into perspective, there are over 700 mine deposits in Tajikistan. Only 7% of the area of Tajikistan has been explored. Of those 700 deposits, less than 20 are actually being mined at the moment, and they're not all polymetallics. There's a lot of silver and gold and antimony and lithium and all sorts of other deposits in there that are just completely untouched. We know that there are quite a few large gold deposits. There's a Takob Gold, which is in joint venture partnership with the Chinese government. That's actually been operational now for just on 8-9 months, and that's going extremely well. There's another gold deposit up in the north part, and then there's this cluster of deposits that we are now involved with, which is quite exciting for the company.
I was going to say,
logistics are hard.
Okay, so there are lots of opportunities there, but let's stick with this shipment, because it sounds as though it was an absolute nightmare to get all the necessary logistics in order.
Yes.
So I'm wondering whether this shipment's going to pay for itself, because it sounds as though it was, quite costly to get to this stage.
Well, yes and no. I mean, we're on a effective royalty basis. So yes, for us, it makes no difference as a company whether it was costly or not. We're getting a percentage of revenue. For Takob itself, they got their calcium fluoride, and this is an added revenue stream for them. So it's a win-win for everybody. Whenever you do your first offtake agreement with China, especially in this day and age, it has to go through a rigorous process of testing. So we had it ready for quite a while, since I think May. Then they had to send over a testing facility to come over, sample it. Then it had to go to Holland to be independently tested. From there, it had to go back to China, go through the government reporting system to see if there are any contaminants in there that would be rejected by the Chinese government. This, at the moment, with what's going on in the world, there are 3 to 6 months delays in this. So we're lucky that we even got it today. And that's only for the first shipment. Once a mine has been authorised, then after that, it's all smooth sailing.
Because I was wondering what the deal is with Trafigura. Will it take all you have? Is it an exclusive offtake? Can you engage with other offtakers?
We did engage with several off-takers. Trafigura offered us the best price, and they are the exclusive off-taker for at least, I think, from memory, 24 months, at which stage we can then put it back out to tender again. But so far, they've been, we're working very well with Trafigura on this and other projects, and they are a long-term potential strategic partner for the company and also for Takob and for the Tajik government.
Okay, because you said there that Trafigura offered you the best price. So, how large a shipment is this first one, and what's it worth to Vast and its shareholders?
Well, I can tell you the tonnage. It's just shy of 140 tonnes. It's all being shipped by truck. It's containing a reasonably high lead content with zinc and quite high silver. all off-takers forbid you from expressing shipment values, and that's because then their competition sees what they're paying for materials. And it's all, at the end of the year, it's reported in a lump sum for the year. And if people want to go and back calculate themselves, they can. But under all offtake agreements, it's the same. No offtaker wants their competitors to know what they're paying for material.
Okay, as long as vast shareholders are going to be reaping the benefits of this.
Most definitely. As I said, it's a royalty agreement, so we get a percentage of revenue, not profitability, on that particular asset.
Got it. Now, let's talk about the other part of the shareholder update, because there's this family tree that's involved with the Memorandum of Understanding with Central Asian Minerals and Resources. So talk to me about the MOU. How does VAST benefit? And doesn't it mean that the company is going to be going at it, going to be at capacity in terms of funds and personnel and available time?
Well, that's what one would think. But if you read the RNS in detail, you'll understand that we are managing the process for Gulf, Bay Square, who are acquiring Gulf Resources that own 49% of the Aprelevka mine, which is approximately 12 mines in total, possibly 13 with tailings. And all we are doing is we're coming in with our expertise. Despite what some people in the market may or may not think, we operate in very difficult markets, whether it's Romania or Tajikistan or Zimbabwe. These are all emerging markets that have their, let's say, their idiosyncrasies. And we are one of the very few companies, I believe, that managed to master these emerging markets and operate. As I always say, we are the only operator in Romania, and we are one of the only operators now in Tajikistan. We are working closely with the state. The state owns Takob, and 51% of Aprelevka is also state-owned, which is how we got in there to buy out Gulf, who has been involved with that mine for over 20 years, but they haven't been actively involved for 10. So working together with strategic investors who are involved in Takob, we have assisted them in acquiring this, so there was no burden on shareholders, not in costs, we don't have to contribute anything financially. We are just offering our technical expertise and our in-country knowledge, and also in our, most importantly, we built Pixton Peerless and Eureka Mine in Zimbabwe. We have a lot of internal knowledge on how to improve these mines. I spent some time out there recently after my lovely 4-month stint in Zimbabwe. I went out to Tajikistan. We've now engaged let's say, a very reputable third-party independent competent person to review all the data. But even at the high level of what they do, and if you have a look at this history of production there from 2011 to 2022, you can see that while they were being managed, they were getting 27,000 ounces per year and 250,000 ounces of silver. And it's now down, last year was down to 8,000, which caused a small loss. But now they're already back to 11,000 ounces on target for this year, and we expect it to go back to the 25,000 ounces moving forward. We know where the processes are failing. We saw that was going to happen in Pixton a while ago when they started to blend the sulfides and the oxides and not separate them properly. We've been through this before. We understand it. We also understand that coming out of the CIS country, that there was no focus on costs. So they were doing things like transporting 90 kilometres, a lot of ore to the single processing plant, and the higher grade. I mean, some of the grades are 5.85 grams per ton. In some of these, the average grade is 2.5 grams a ton. Just that's on the gold, and then 10 times that on the silver as a medium. And if you look in the RNS, there's a combined total, and this was only high level exploration in these areas that were previously mined under the Soviets. There's 35 million tons of ore. There's about 1.8 million ounces of gold, 25 million plus ounces of silver. And in some of them, they're polymetallics as well that have never been extracted. There's over 8 to 10 million tons of tailings that were getting a 65% efficiency. So the opportunity is endless. And again, we've structured in a way that it will not impact shareholders other than reaping the rewards of revenue based on performance.
Okay, so you gave me a huge big picture there with lots of numbers, which can't quite process. But going back to, you said that you were managing this memorandum of understanding. So therefore, really, is VAST just an administrative enabler?
Yes, indeed, that's exactly what we are. But for that, we are getting 10% of the profit share with an option to buy another 20% within 5 years. So basically getting a 10% free carry on performance. So if it makes money, which we are very confident it will, with only a minor restructuring, and to put things into context, that there are 12 mines in this basket of assets, and each one of them is larger than Brixton Peerless. So, and everyone was whinging at the time. So when we divested in that, so there is an opportunity here for a great relationship, not only with Baseware, but most importantly with the Tajik government, because as we did prove ourselves with Takob, we now have this opportunity, and we hope there are many more. And what we're trying to do now is enter into joint ventures or enter into management agreements whereby it doesn't impact the shareholders as we sit today. Things may change in a month or in 2 months or in 6 months or whenever, where we do have the cash available to contribute as an equity basis and then get a larger share. And we've also in this contract got the opportunity to purchase at a later date, but it is 100% at our option. So we're not obliged to do so.
Now I understand. So the management enabling is another string to Vast's bow, as it were. So and it's expanding your network. So while the company is getting more embedded and recognized in Tajikistan, the market is still focused on the diamonds in Zimbabwe. Where are they, and why haven't you got them? And give the market reasons not to be obsessing about them and associating Vast with diamonds or missing diamonds only.
Oh, with the irony is that the diamonds represent a very small percentage of our portfolio, and people are fixated on it because it is such a near-term potential cash. The reason why we are not talking about it, we're not bringing it into the public domain, is because that is the way that we need to do it to enable us to complete what we started. It's not something that I don't not want to talk about. It's something that we are not in a position to talk about, but we have been saying all along that we are highly confident this thing will come to fruition. There was the elections, there was a change of minister, there was a change of attorney general, there may be other changes within government, but the president has remained the same. As stated previously, we have the approvals from everybody. It's now just a matter of putting it to bed, and we are confident in that happening. Otherwise, we would be obliged to say otherwise.
Okay, I'm just wondering if shareholders will get a sparkly Christmas gift.
I'm not at liberty to say, but always hopeful.
Great. Andrew, thank you very much. Thanks for your time. Andrew Prelea, Chief Executive of Vast Resources. Thank you very much indeed.
Thank you.